Working through this Monday, Mark Oppold, and we are 15 minutes after the hour. Clock says time for your grain update. Let's go ahead and start that conversation. Jim McCormick joining us from our friends at Allendale. Jim, before we get to futures here, let's talk a little bit about those export inspections, and then I think we have new information just now released from the NOPA and the soybean crush. But first things first, numbers this morning from USDA and the export numbers.
They came in, the corn numbers, Mark, came in here right about 1.1 million metric tons for the corn. That was at the high end of expectations. The bean exports, they came in at about 285,000 tons, which is also kind of at the lower end of expectations, so that was a little bit disappointing. And the wheat exports came in at a very solid 579,000 tons, so that will help the wheat out a little bit. And then the big number that just came out here a few moments ago was the NOPA crush, which actually was a little bit disappointing. We were looking for about a 143.1 crush. It came in at a disappointing 138.07. So definitely not crushing as many beans, and that's kind of been the trend, unfortunately.
There we go. Yeah, looking here at the crush there. Again, they were looking for 140 to 144, and it came in here with 138.07. Let's go to the board and check out the futures here now and get your thoughts. I guess after you look at numbers like this for a few seconds, you'll right back over to weather. Is that right?
That's pretty much it. Like I said, the crush is disappointing, but you look, the bean market's still trading, 4 cents higher across the curve, pretty much because we're battling a weather front. You got a lot of heat building into the southwestern part of the Corn Belt. You do have some pretty good chances of rain in the northern Corn Belt, and that's kind of the tug of war we're facing right now. But with the funds kind of liquidating, they caught everyone's surprise showing they were linked long last Tuesday. With the hard break last week, a lot of people think they're kind of flat, and maybe they're putting a little weather premium back into the market to begin the week.
Looking at a penny and a half higher now in the corn trade. That would put December back to $3.91. That was within a penny of their high of the day. December is up a penny and a half. Looking at the soybean trade, we'll see what the quick reaction is still higher by 4.25 here. The live quote we saw here, even with that disappointing NOPA number. But it does show you the concern, of course. We talked to other analysts talking about the looking at beans that are across the country. You can find a lot of fields, Jim, where they're small for middle part of July.
I would 100% agree. I actually just drove from Chicago down to Seymour, Indiana, my hometown, and back over the weekend. And I tell you, you would think it was mid-June as opposed to mid-July for the height of the beans. And a lot of fields in the northern part of that state have just caught so much rain, you can see flooding in the fields. So they're struggling under just essentially way too much water, plain and simple.
So we have a still 4.5 higher in beans. The August contract is at $9.93, September $9.97, and November new crop over $10 again, back 10.05 and a half. Let's move to the wheat trade here. Again, our export sales number for wheat was above last week and above a year ago levels here, but we're still down a couple of cents in Chicago.
Yeah, they're down a little bit in the wheat. There is, for the first time in a while, there is some chances of rain in, for the Dakotas. Although the spring wheat's higher, the Chicago wheat is where the funds trade, and they're kind of selling the wheat, maybe doing a little spreading of selling wheat, buying corn today. 2.5
lower at Chicago. Check Kansas City, and we have been lower there, down a nickel. Now, the December anyway, down a nickel. We've been higher in Minneapolis, as you mentioned. That's where the, of course, the issues are, and up over the Canadian border, our friends the north. You folks there looking at your spring wheat under pressure. Canola crops declining as well. 9 cents higher. September Minneapolis is at $7.67. Jim, we'll take a break and come back and get your thoughts on the livestock trade. Jim McCormick from Allendale joining us. We'll be right back looking at livestock after this. And welcome back as we take a look at the livestock trade. As promised, Jim McCormick back with us from our friends at Allendale. Jim, you're looking at a big drive here back to your home territory here. Not a lot of livestock in your part of the country anymore, is there?
It's pretty much just grain country. You do get, there's northern Indiana has a lot of dairy cows and chickens that feed that Chicago market, but No, not a lot of beef cattle anymore. A few here and there.
And the ones that we do, that big, heavy cattle country, they're looking at a lot of heat out there. Let's go to the futures here and look at live cattle futures as we sit here right now, 20 minutes after the hour. Looking at live cattle higher, not a lot. August, in fact, is down 58, but October and December, we get into that fourth quarter, are higher here. Talk about the beef complex there as we see the beef cutouts here coming in. In fact, we have a new update here, but at bottom line, still the lowest, and it's around, what, the 10th or 11th of April?
Yeah, pretty much. The cutouts were in a free fall. The noon ones, they kind of popped up a little bit, but they've just fallen hard, and it's hard to get too optimistic about demand the next 2 weeks. With this heat building across the Midwest and into the Eastern, the demand should hurt. At the same time that we should, we're looking for the seasonal tendency for the beef supply to increase, so the market's kind of a little bit of a tug of war right now.
And then we look at that. I'll get the numbers again, those of you tuning in on the radio, but Jim, I want to get your thoughts on the hog complex, and we have a new updated numbers, and we'll get to the pork trade here as well. But lean hog futures, first of all, taking a look, updated numbers are mostly higher. July, of course, delivery is lower, but August up 68 and back over 80.5. But that's still that big spread between August and October widens further.
That spread is just, continues to widen. It's like the August wants to try to match where the July is going off the board. But, the deferred ones are looking at just an overall supply increase as we go into the fall, and that's why you're seeing that spread just continue to widen, it looks like.
And let's take a look then at the, and I'll get the numbers there as well, but our pork cutout numbers just coming here as well, and thoughts there as arrows are mixed, mostly higher, a little bit lower in the loins.
Yeah, the cutouts, like I said, the market really, we're same problem. You're kind of getting to that dog days of summer where no one really wants to stand out in front of a grill and, and grill at this point, so I think that's going to hurt the demand, at least near term. $8 higher in bellies, hams up over $1, and as mentioned, loins down $2.77. Bottom line, though, the carcass is up 80 cents, 105.28. So looking ahead here in the fourth quarter in the hog complex, a lot more. We know that more hogs are on the way. What about any strategy you might offer to a producer out there? Right now, we'd be recommending, trying to, especially on any kind of run-ups like we get today, consider buying puts, try to protect it. Like I said, we're looking for a bigger increase in pork, but we're also looking for the supply of cattle to increase. So the overall competition is going to be stout for the pork and the cattle. The optimism, can China come in and buy and keep the demand going? I think there's, especially in the beef, with China opening up beef trade, we'll see if they can take some of this excess supply that's coming at us on both the pork and the beef.
There you go. Jim, thanks for your time. As always, we look forward to keeping in touch.
Thank you for having me on.
You absolutely. Jim McCormick from Allendale joining us. All right, as promised, here are the numbers real quick before we hand it back over to Janet. Live cattle futures, these are up to the minute. Live quotes from CME. August lower by 38 points now, 117.42. October, though, up 20, 118.78. Check the feeder cattle trade. Feeder cattle futures all higher. August up 87, 155.15. September at 155, and that's up 92. Hog futures right now are mostly higher than nearby July in delivery. So August and October getting the volume, and August is up 72 points at 80.62, and a big drop here, as Jim mentioned, to the October contract. So keep an eye on that, Janet.
All right. Thank you once again, Mark.